All right, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. Another day, another break higher in equities. Let's talk about that for a moment, and then I'm going to talk about just some of the divergences that we're seeing, and let's just note some things here. And I'm gonna kind of give you a little bit of insight on some conversation I've been having with like the guys from my office. So we got the S&P, right? The S&P is it's trying to break that downtrend line. We have this probably fairly important resistance because this would be the new trend highs right here at the 3240 level that's upcoming in the S&P. So at this point in time, we have to assume that the stock market is going to break higher based on the trend line here being broken. And so while we're above we could say the overnight lows, we have to assume that we're going to break higher, right? The problem is that you're not seeing this translated into FX, and that's the conversation that the guys and gals that I say the guys and gals, the guys that I'm having conversations with and from my trading office is we're talking about this. Okay, how many traders right now, or how many institutions, whoever, how many are building dollar short positions, whether it's in the Aussie, whether it's in the Kiwi, definitely in the Euro, how many, and even in the cable, how many are trying to build dollar short positions, yet they're not getting paid for being short dollars while equities are breaking out. Now, if I'm short the dollar, which I'm not at this moment, because I probably like you, I want to see the Aussie dollar well above 70 cents. I want to see the Kiwi dollar above 76 cents, or 66 cents rather, so I want to see the Aussie up here in this neighborhood. I want to see the Aussie or the Kiwi up here. I want to see like some pretty definitive breakouts before I get super excited. But if you shorted the dollar, and let's say you're long Aussies or you're long Kiwis, you don't have any reason to not be short dollars. But there definitely is a risk building with these dollar short positions, because one would expect that with the equity markets breaking out, that we're going to get some follow through to the upside or downside dollars. And if you're not getting that bang for your buck, at some point you're going to turn around and go, I don't want to be in this position anymore. Now, I'm sure, just looking at the charts, we could really identify where that is, especially with the Aussie would be, back below here, this support right there through the horizontal support. So it'd be probably 69 cents, right? If we drop back below 69 cents, anybody who's long the Aussie is going to say, oh, forget it, I don't want to be long anymore. I don't want to. It didn't go higher, so now it's ready to go lower, right? But are we even close to that yet? No. So it's kind of like this standstill, right? You got dollar bears that are like, okay, I don't have my position isn't working for me yet, but it's not saying it won't, because as long as equities continue to move higher, eventually the Aussie should break higher, right? Same thing with the Kiwi. It's like, you're long the Kiwi dollar and the New Zealand US dollar. There's no reason to sell it yet, but I think if we get back below, right here at 65.20, somewhere in this neighborhood, then you got to be a seller, right? Now, in my opinion, that's really good information to know, because we will know that things are not working out for anybody who's on the long side. If 69 cents is broken in the Aussie, if 65.20 is broken in the Kiwi, then we know that, hey, this is we've got to actually start being on the other side of the trade, because now you're going to get all these longs that have built these long positions. They're going to get out. Okay. Now you have the dollar Canadian as well. The dollar Canadian is just kind of bouncing around, but I have to tell you, the dollar Canadian is holding up pretty darn well considering, right? I'm not long. I tried playing it on the long side last week, you know, when we were near 36, 136, and I got out on Friday because I just didn't want to hang around. But I'll tell you, the dollar Canadian's holding up well, and while we're above the 200-day moving average, I think the you know, being short the dollar Canadian is a risk. Now, if you were in the ForexAnalytix chat room, you know that I'm building an Aussie yen short. Now, I'm not aggressive right now, and let me show you the reason why. Okay, see this? These two black or red candles. You know, we call them black because you know, white and black being the color of candlesticks before they were, when they're print them out on charts, but that's why ForexAnalytix references them as black and white, but it's, you know, green or red, or in this case blue or red. But you'll see that there's a bullish candle which is following up you know, these two down days, which is actually a piercing line, which is a bullish formation, but it's still early. And one thing that the Aussie yen is doing is it's failing up here at a couple of trend lines and you know, what I think is probably triangle resistance. So I'm building a position because it's very similar to the Aussie. If stocks start to turn lower, the dollar is going to probably gain some strength, but also the yen might gain some strength. So being short the Aussie yen makes a lot of sense, especially if you look at the daily chart and if we break through this support. So I don't mind being a little short right now. I want to be aggressive below 74 yen, because below 74 yen, I think we take on the 200-day moving average again. So we're in a triangle. We're just at the top of the triangle, and I've got a little position going, but it's nothing. It's nothing aggressive, and I don't, because, you know, this is a tough market just to be really aggressive in. But it's very similar to what you're seeing in the dollar, because when you have the Aussie yen, which typically moves higher during risk appetite, which we're seeing today, you know, we got stocks up over 1% on the S&P, you know, the Russell's up 1%, the Dow's up 1.5%, 1.6%, the NASDAQ is up 1.6%. So when you have the major indices that are up, you expect the Aussie yen to be higher, which it is. But I think a lot of traders are also expecting the Aussie yen to you know, be breaking out here, and it's not saying it can't, but it's not as of yet. So it's kind of one of those situations that if you're long the Aussie yen, you're probably thinking, okay, you know, why isn't it going higher? It should be, you know, it should be breaking down, but it's not. Or it should be breaking out, excuse me, but it's not. And I will tell you this, that this is a triangle formation, and you know, if you look at the patterns in play, the pattern in play will be in play should the Aussie yen break, you know, down, because I will, you know, start looking at it as an actual pattern where the targets come back down towards the 200-day moving average, maybe even lower. But right now I'm just kind of trading inside of this triangle, just, you know, selling it up at the upper end of it, and you know, trying to get a better price if it does indeed break down in the next couple of days. But it's like a salmon swimming upstream. It's tough, and I'll probably die when I get to the top of the stream. So but anyway, that's the Aussie yen. Anything else I wanted to really talk about? Well, you know, we talked about the S&P down. I want to say gold and silver continuing to be strong. There's gold. Silver's, you know, at the 161% extension, and also very big channel resistance. This is, and my channel is not perfect, so you know, we could be right around these levels for you know, 19 to 1950. But this is the channel that I see. It's a descending, slightly descending channel, and it's a pretty important one. And we're testing that resistance right now. I think eventually we're going to break out. I don't know if we're going to break out right now, because DSI is really high for silver and gold. So we might need to see a little bit of a reset before it actually breaks. But that doesn't necessarily mean that that's going to happen either. You know, we could get explosive moves building in some of these precious metals. Like I said, precious metals are very similar in my view to what we had experienced back in 2009, 2010. I think you're going to have something very similar happen. May not be right now, but I think it'll be happening here sometime by the end of the year. All right, if you guys are listening to this after the fact, and you're not listening to us live, then that means you're not a ForexAnalytix subscriber. So make sure you try us out. It's only $1 for 10 days. For those of you that are, are all clients or customers of us, of ForexAnalytix, I want to thank you very much for your support, as always. So I will see you tomorrow. I'm going to let you go. So have a great one. Thanks, everybody.